Welcome to the final part of my top 10 tips for prop trading success, and if you haven't seen the other ones, you can check them out here. But right now, here's some more tips.
My number 7 is trade entry confirmation. We spoke earlier about strategy and setup. Well, this is that one little extra criteria that you need, and it's the one that, if met, allows you to enter the trade and hit the buy or sell button. So you've got a trend strategy. Price has been moving up in an uptrend, and now you've identified a pullback. Your next criteria is price needs to touch the moving average. Okay, that's also happened. Now what? That's not enough to let you hit the buy button. Perhaps you've been drawing a trend line down that pullback, and this is the first time you've seen a bullish candle on volume close above that trend line. That would be a good entry criteria. Or you've had a series of red candles in that pullback, and now you've had a bullish candle close above 3 or 4 of the last red candles on volume, and that's a good entry criteria. I advise you to put an entry criteria rule into every one of your setups and stick to it. I promise you it will save you some of those losses that you incur from just getting in too early. Stay informed is my number 8. This of course includes economic data releases, the time of the data release, and should you even be in the market at the time of the data release. News catalysts, grade them 1 to 5. If your stock has signed a massive deal with a massive player in the market, of course that's the number 1. Phase 3 data pass on a small cap, that's a number 2. If it's a bit woolly, this news, you've kind of heard it before, it's been reworded, mark it down as a 4 or 5 and don't expect a lot from that stock to the upside. Other little keywords that you'll need to be aware of, but go investigate yourself, is dilution, warrants and float. Check those out. The more informed you are, the better chance you've got of profitable trades and success in passing the program. I have to include this one. I know everybody says it. Number 9 is journaling. How can you expect to eliminate bad, consistent losses that you're making if you're not journaling your trades and looking back at that information from the past month to let you identify it? Doesn't matter whether you're just popping this into Excel with a before and after screenshot, or whether you're using journaling software, whatever it is, the time you entered the trade, why you entered the trade, what was the strategy name, what was the setup, what was the confirmation rule that got you into the trade, did you hold the trade long enough, what were your mental thoughts going into that trade or managing that trade or coming out too early if you did. Put all that information down on every trade, leave it for 30 days, then at the end of 30 days go back and review it all and filter it by time, filter it by strategy. It might just jump out at you easily what you have to stop doing in order to become profitable. And finally, number 10, and controversially number 10, are you convinced that looking left on your chart to identify key trading levels consistently predicts good trades to the right hand side of your chart? I'm not convinced, and coming from an investment banking background, there's business to conduct every session, every day, every week. And I'm not sure traders are looking left to find key levels to execute their urgent client orders at the beginning of that session. I urge you to look more at the pre-market and take notice of those levels, and the opening 30 minutes of the trading session, and concentrate on those levels to work from with your trading strategies. And maybe, just maybe, you'll find yourself being a little bit more consistent and profitable by doing that. So there you have it. They are my top 10 tips for passing the program, and I really do hope they help you to become one of Trade the Pool's very next stock stars. So if you like the video, give it a thumbs up and subscribe for more content to help you pass the program.